So in this video, I lay out the top 5 investing problems I see as a CPA. And this mainly comes down to people not knowing how to use fundamental analysis, people not understanding how basic statistics get applied to the stock market because it's a very chaotic place. What are some of the common technical analysis tool I use, which you can use as well, and how to use options to generate income as well. So let's get started.
So let's talk about the top 5 problems with investing. So the first one is most people don't do any analysis before investing. So they might do some technical analysis, but they often ignore fundamental analysis. So you need to learn both technical and fundamental analysis, including income statements, balance sheets, and cash flow. So that is like the minimum you need to master fundamentals. Now, in terms of fundamentals, it can be quite time consuming. So most people use multiple days just to analyze one company. But as a CPA with over 9 years of experience, I know quite a few shortcuts that can help you analyze fundamentals very quickly. And usually you can get it done within an hour. So later on in this webinar, I have 2 historical coaching calls where I go through multiple examples on how I analyze fundamentals and the shortcuts I use. So you can watch till the end. Now, number 2, most people invest, but they buy at a price that is too high or not buying stocks at a discount. You need to have the right tools, basically indicators, to help you find discounted stocks. And that is really the principle for long-term investing, is to buy low, sell high. And one of the statistical tools I use to identify discounted stock is Bollinger Band 2,20. So if you don't know what that means, that is the parameter for this indicator, which I'll go over on how to set it up later on in this webinar. So basically, it looks at the last 20 periods of data, and it helps you visualize where the price ranges 95% of the time. So to teach you this tool, I need to bring you back to high school math, where you first saw the bell curve. Basically, it's the distribution of data points. And when we are investing, we want to focus on data. We want to make logical decisions, not emotional. And you're basically looking for when the price is outside of the normal range, which is near the lower parts of the Bollinger Band. So here you can see the red rectangle, which is the 2 standard deviation of the bell curve. So the probability of that happening is like 5% or so. And when that happens, you want to buy. So how you set this up, which I'll go through this in detail later on in this webinar, is that you go to tradingview.com, which is the charting software I use. You go to the indicator tab on the right-hand side, search Bollinger Band, and then click add, and the default parameter is already 20,2. So you just click add and you should see it on Apple looking like this. And basically whenever it is close to the bottom parts of the band, these rectangles you see here, that's a good time to buy. And for this stock is Apple, and you can see that over the last 2-3 years, there are 4 or 5 opportunities to buy Apple at a discounted price. So for long-term investing, buying stocks at a discount is crucial. Problem number 3, most people invest long-term, but there's no mechanism to multiply your profit. Now, this ends up pushing you to invest in higher risk stocks that are less proven. For example, penny stocks, small caps. Previously, people invested in electric vehicle stocks, and a lot of them tanked. So to achieve 30%, you just need to focus on big blue chip companies, plus a discounted price, like I showed you earlier, and a profit multiplier, which is using options. So for the last 3 years, where I worked with some of the biggest private equity funds in the world, this is how they invest. They look for big companies at a relatively good discount, and they use leverage on it. I'll give you a quick crash course on options. Now, when you're buying options, it's like buying shares or buying a house, and you just put a down payment, and basically you're paying interest to multiply your return. So for long-term investing strategies, you can use options to multiply your return, and you can usually 2x to 3x your return. So if the stock goes up by 10%, you can get 20% using options. Problem number 4. Most people only focus on long-term strategies, but have no solution for loss protection or even making money when the market is going down. So the solution is that you need to learn both long and short strategies in order to protect yourself. So during the 2022 market crash, the ability and the knowledge to use protective options is quite useful. And when it comes to a bear market, it happens once every 5 years. You might not know you need this knowledge until a couple years from now, but if you have it in your toolbox, you'll always be ready to protect yourself during a bearish year. So you know it's coming, but you just need to have the knowledge to protect yourself. And you only really need a small amount of money for hedging. So for example, less than 5% of your portfolio. And if you do this right, you can hedge 50% to almost 100% of the downside. Problem number 5. Most people focus on making capital gains, but they don't have a method of generating passive income. Now, to generate monthly passive income, you need to learn option strategies that give you interest. So basically rent once a month. And if you execute this successfully, it should take you around 1 to 2 hours a week, especially if you copy or follow some of my trades as well.